Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone. We've just released a monthly India market outlook titled Buyers Rather Than Sellers. In this episode, we discuss a key question: how should investors position to navigate the volatile times? The past fortnight has been an interesting one. After a strong recovery in the month of March, Indian equities came under renewed pressure in early April amid a global risk-off triggered by higher than expected sweeping tariffs announced by US President Trump. Volatility surged across regions and asset classes amid rising risk of a global growth slowdown. Markets, however, recovered later in the month after President Trump placed a 90-day pause on higher reciprocal tariffs on over 75 countries, which reached out to negotiate deals. Now, coming to the most important question on investors' mind: how should one position to navigate volatile times? Before the reprieve, India's tariff at 26% could have resulted in a negative impact of nearly 30 to 50 basis points on India's GDP estimates for the fiscal year 2026. The lower tariff of 10%, though, could still have a negative impact of around 10 to 20 basis points on lower US imports and slower global demand. However, in a relative context, impact to India's growth could be lower than peers given the following factors. 1. Lower share of export in India's overall economic output. Second, nearly 20% of India's exports to the US are exempt from tariffs, and these sectors include key sectors like pharma, fuel and products, and chemicals. And third, export-heavy regional peers are hit by higher tariffs. Nevertheless, we expect heightened volatility over the coming few months as countries negotiate bilateral agreements. But volatility could result in opportunities amid a sharp sell-off. The environment also highlights the need for adequate diversification in foundational allocations, which can be achieved via overweight equities. We expect equities to outperform other asset classes over a 12-month horizon and would buy on dips given positive momentum in key high-frequency macroeconomic indicators. Fiscal consumption boost in the annual budget and the prospects of further monetary policy easing is supportive of India's growth in corporate earnings. Further, better valuations and relatively low foreign investor positioning in domestic equities could limit the downside on Indian equities. Within a neutral allocation to bonds, we prefer the barbell strategy. We see room for bond yields to decline further amid modest inflationary pressures and RBI rate cuts. This drives a preference for medium and long maturity bonds given still elevated yields. Our constructive view on growth and earnings recovery drives a preference for corporate bonds over government bonds as they offer cyclical high spreads. We like multi-asset strategies and gold as a key hedge against downside. Multi-asset strategies with dynamically managed exposure to major asset classes like equity, debt, and commodities can help improve portfolio diversification and risk-adjusted returns. Liquid alternatives and market-neutral strategies having low correlation to traditional assets are other potential routes to lower downside risks. For gold, little has changed after its recent rally. Central banks remain buyers amid heightened US policy uncertainty. We maintain a neutral allocation to gold as a potential hedge against higher inflation or stagflation worries. To summarize our view, we do expect volatility to remain elevated in the coming few weeks. However, a diversified asset allocation with an overweight on equities, neutral allocation to bonds with a preference for medium and long maturity bonds, and high quality corporate bonds. To hedge the downside risk, we like multi-asset strategies and gold as a portfolio diversifier. That's it in this episode. Do reach out to your relationship manager for a copy of our India Market Outlook. You could also find this on our SC Invest platform at www.sc.com/in, or alternately, you could also visit the Standard Chartered Market View on the Go page on our website. Thanks very much.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered relationship manager or visit www.sc.com/in.